Ladies and gentlemen, Bitcoin is in a tough situation right now. Very tough situation. I'm going to get into it quickly today. I'm not going to waste your time. 61.1k, 61,100 is the highest ever monthly candle close level that Bitcoin has ever reached, right? We reached it here in October 2021. We retested it here in February 2024, which was just last month, and we actually rejected from that level. As you can see, we closed right on top of it. Now, in this candle, we are currently above it. But that doesn't mean much, right? Because we could close below it. That could be a massive wick to the upside. That could form one of the most bearish monthly candles Bitcoin has seen since back here in November 2021. So Bitcoin right now, although it might look good, it might look like it's breaking a macro monthly level, it's actually in a very sticky situation. I've got 8 days until the close. And as I said, if Bitcoin closes this candle red, not only would that be a rejection after a majorly bullish candle, it would also be a spinning top formation, most likely, or a bearish hammer formation that would send Bitcoin flying downwards to a more extensive correction, right? Now, this monthly level at 61.1k does not just stick on the monthly chart. It stems to other charts as well, right? We can see it playing out on other charts. So for example, this is the monthly chart here. We'll make this line yellow. All right, that's 61.1k, the very important monthly level, which we need to close above. If we close below that, that's very bad news. If we go to the 4-hourly chart, we zoom into the 4-hourly chart, we can draw in that same exact level, the 61.1k level, the same exact price level, and we can see, let's just get it perfect there, that 61.1k on the 4-hourly chart is also a very major level on short term. Right, what you can see is that Bitcoin has edged above this level. It's tested it for support on multiple occasions, right? Support right there, support right there, support. We've bounced every single time, but the more we test that level, the weaker it gets, okay? And what we identified in yesterday's video is that right now we could be forming a bearish structure on this support level at 61.1k, which originates on the monthly chart, a very important monthly chart level. What structures could we be forming? Well, first and foremost, we could be forming some sort of cup and handle formation, an inverted cup and handle formation. As you can see, inverted cup and handle, that is a very bearish formation. We also could be forming, and this is new information right here, we also could be forming a head and shoulders candlestick formation. As you can see there, head and shoulders, the left shoulder right there, the massive head, the right shoulder. These are both very bearish formations, which would suggest that Bitcoin would go downwards massively. Where would they suggest Bitcoin would go? All we need to do is take a measured move from the top of the cup, okay, to the bottom of the cup, the neckline at 61.1k, that major monthly level, and apply it to a potential breakout point of that neckline, and we can see that takes us right to 49k. Now, that's not a random price target, okay, and this is why these structures have validity. This is why I made a video on them yesterday. I'm making a video on today. That's not a random price target, that 49k level. 49k, if we zoom out on Bitcoin, is a very important macro support zone. We go to the monthly chart, for example, and we can see that line we just drew at 49k, that yellow line down there, is a very important macro support zone because it was tested right here in the dead cat bounce region of the 2022 bear market. It was also tested before breaking to the upside here in January. It's a major macro support zone that literally divided the bull market territory from the bear market territory. So that 49k level is not random. It's not a coincidence that is being targeted from the inverted cup and handle formation. It's not a coincidence that the head and shoulders formation targets that level. And it's quite concerning. And I was quite concerned yesterday. I made a video about it. I didn't say I was bearish. I didn't say I was entering short positions. I'm not here sitting in short positions, right? I'm waiting for breakdowns. I'm waiting for that neckline to break. But right now, the reason I'm making this video, I'm not just copying yesterday's video. I'm making this video for a very important, precise reason. I'm making this video to discuss the fact there has been some conflict in the charts here. Okay, so you can say this is a head and shoulders formation or an inverted cup and handle formation, but as of 8 hours ago, you could also just as equally say, in a just as valid way, that this is a symmetrical triangle formation. Okay, you see the retest of a triangle from down here. You see a couple of retests from a triangle from that regard there. You have about 2 days into the breakout point, and you can see that is a symmetrical triangle, or you could actually say it's a descending channel formation or a descending broadening wedge formation. Both of these structures are bullish structures. So now we've got a situation in which we've got a head and shoulders formation, okay, which is a bearish structure. We've got an inverted cup and handle formation, which is a bearish structure. So we've got two bearish structures, but then we also have two bullish structures. We've got a descending broadening wedge formation, and we've got a symmetrical triangle formation. So do two bearish structures and two bullish structures, right? Which one will prevail? I don't know. Now, I can look at evidence from USDT.D, this is a USDT dominance chart, and you can see USDT dominance is a chart that's been in a massive uptrend with a massive level of support zone stemming back from 2017, and you can see that that's on support right now, meaning that USDT is very likely to go upwards. USDT dominance is very likely to go upwards. The only way that USDT dominance goes upwards is by people selling their crypto into USDT. Okay, that's where it comes from. When people sell, what do? They put their money in stablecoins. Stablecoin dominance rises. So every single time we have a bull market, this goes downwards massively. Every single time we have a bear market, this rises massively. Right now it's on support, which could be indicative of it rising again, which could be indicative of a Bitcoin correction. Because again, the only way it would rise is if Bitcoin and crypto corrects, okay? Because that's how money goes into stablecoins. We also have USDT dominance RSI showing a descending channel formation, which is actually bad news, because if this goes up, it means crypto goes down. Remember, we've just tested support on the bottom of ascending channel. We've just kind of entered a oversold region, which again is bad news for crypto, because it means that if this goes upwards, if this chart's bounce here, that's bad for crypto. It means that crypto will be going downwards, okay? So we've got things like this USDT dominance chart. We've got things like the inverted head and shoulders candlestick formation, the inverted cup and handle, and then the head and shoulders formation. But then we've also got this bullish evidence. We've got these symmetrical triangles. We've got the descending channel formation. We've got the fact that we're still above 61K, the fact that we're still holding onto that level. We've got the fact that we've got a 4-hourly chart, a descending RSI resistance line, which doesn't really leave much room for Bitcoin to go to the downside anymore before we see upwards momentum via breakout. We've got the volume on Bitcoin descending in this downwards trend, which is indicative of the correction coming to an end. We've got all these conflicting factors, all these conflicting evidence. We've got Bitcoin, for example, breaking upwards high, above all-time highs, 200 days earlier than expected by the 4-year cycle. We've got Bitcoin breaking 49K without a pre-halving correction for the first time in Bitcoin's entire price history. No pre-halving correction, unless we're seeing it right now, but assuming that's not the case, no significant pre-halving correction. All these things are happening, all these, conflicting factors, all these conflicting arguments, all these invalidations of trends. What do we do in this situation? That's the question. With all this stuff going on, what do we do here? Here's what I'm doing, okay? I'm not willing to jump into short positions or long positions right now. If we were in a normal market environment, I would confidently say that the bearish argument on the short-term level is stronger than the bullish argument. But we are not in a normal market environment. We are in a macro bull market. And so the bullish argument, if it exists, it needs to be given validity. And it does exist right now, because we do have these channels, we do have these triangles. So right now, what I see Bitcoin in a situation where it's getting clamped against 61.1K. 61.1K being the macro level. It's getting clamped against 61.1K. It has this descending line of resistance. Both these lines are valid regardless of the structure you think it's in. So we have a situation in which we will be breaking out either to the upside or the downside by the time these lines click together, which is within a few days. So within a few days, Bitcoin will be breaking up or down. Here's what I'm doing. Instead of focusing on predicting what's going to occur, I am going to react to what occurs. That is the much more smart, much more logical thing to do in a situation in which you have conflicting evidence. React rather than predict. If Bitcoin breaks below 61.1K and it flips it for resistance, that is when you start doing things that would be indicative of bearish price action. You start entering shorts if you do that kind of thing. You start de-risking if you want to. I probably won't be doing that because it's a macro bull market, but potentially short positions, etc. And if we break above this level and we start seeing upwards momentum and we break above the local high, that is when you stack up on your bags and you become confident that we'll be entering new all-time highs shortly, okay? This is a reactive time in the market rather than a predictive time in the market. This is shown inherently through the fact that Bitcoin has done things that it never has done before. The fact that it's breaking macro trends, the fact that it's moving higher than expected, faster than expected, all those things cannot be predicted by evidence, because the evidence is historical data. The historical data is being invalidated. Those things can only be taken advantage of via reacting. So we need to utilize the market environment we're in. We need to understand this is going to be a bull market that is full of reactive methods rather than predictive methods, and we need to take advantage of them. Guys, conflicting data right now, but you need to react when it occurs. And I'll be keeping you up to date. I'll be keeping you informed. Thank you so much for watching. I hope you enjoyed. Go ahead and check out the Crypto Academy. We're having a bull market sale right now. If you want to learn how to trade, that's where you can do it. BingX and BitGet, my exchanges on this YouTube channel, 15% trading fee discounts below. Get on these exchanges, never been hacked before, very low trading fees. Referral links are down below. And finally, the VIP group on Telegram for altcoin trading signals. If you want to trade altcoins at a 78.52% win rate, that's where you can do it. Thanks for watching, guys. Hope you enjoyed, and I'll catch you tomorrow.